We're on back again.
All right, welcome back. Is this our third one or second one?
Third this week. I'm
Yeah.
tired.
Right?
Oh, God. All right.
I'm
Well,
never tired, but
yeah, I mean that's because I'm traveling for the next month and a half. So
Right.
fit these in. So yeah, all right. We'll give our opinion about the market here, but I think more important will be what Gary thinks, because you've heard us drone on now 3 times this week.
Right.
Market moved up yesterday, seemingly on kind of the Google antitrust news. Apple tagged along. Today, I mean, looks like some follow through. It looked like they were trying to sell this thing off, but bulls are stepping in. Jobs number on Friday. I probably wouldn't try to be a hero ahead of that. Anything can happen. So that's kind of it for me. Jeremy, any new thoughts on the market here?
yeah, just QQQ melting its way up to my angular resistance target, that diamond pattern I've been talking about for almost a month now. And then tomorrow the jobs report kind of puts it right at the point where it ought to break. And typically every pattern you see is a consolidation. When you see the range tighten like this, usually something's about to make a pretty sizable move, typically. I'm looking for a target of like 574 on QQQ today, and we'll see where we go from there. Tomorrow is going to be the ticket. And then we have a couple of things. I mean, like the earnings situation wasn't the greatest this week. I forget who was announcing, but didn't really have a huge influence on the market except for the speculation into it. And then the next step is just, again, waiting for people to decide which way to go. Market will start probing prices.
Broadcom is tonight.
That's right.
I've heard Rob talking about it. That's a big one.
Yeah, I forgot about Broadcom. Darn, I'm gonna have to watch that one. And then there's always opportunities. I encourage people to put at least some sort of way to look at the day's top losers, and I'll find some of these things that just absolutely get crushed and oversold to the point where it's just we call it the dead cat bounce setup. One I want to mention real quick, a trade I'm in, NEON, and that thing is just flown right off my support level. And yeah,
wait, you're in this like today?
Today, scalping it. Yep, today. And picked it up at $4.20, and yeah, it's just riding high now. I got a target right there at $8, but it's hit a couple of my previous targets at like $4.93 and $5.95. So I took some profit off there. I'm a day trader too, at heart, and this is one of those ones where, in my opinion, I could just walk away with setting limit orders, and I don't have to be present in it. But every once in a while, you see some opportunities like that, and that's the idea, is just to keep mindful of what the market does, but don't just look for the biggest gains, the biggest runners. I mean, Chase is not a strategy; it's a bank. So, if you find the right thing and you have a pretty good notion of it being very oversold, you'll find some gems if you just look for the top losers of the day. Just a little piece of advice I'll have to give to people.
All right. So we have Gary Kaltbaum from Kaltbaum Capital here. Makes a lot of really interesting posts, including one about Kanye West, actually. So I thought that was cool.
Which one
Gary,
was that?
you were talking about Kanye's coin, how he made like $1 trillion on a coin. And, I think you put like a big question mark on there, like Kanye's making $1 trillion. This isn't the top or something. You know what I mean?
Whenever I see bubblicious, I put doesn't happen at the at the bottom, that type of thing. So,
Right, exactly. So,
and we've seen enough of some crazy stuff in the last year or two, but the market's still going on. So until it ends, it doesn't.
Right.
So,
go ahead.
As I say, should we talk about PLTR? That was fun yesterday. Our guest and I, we both exited that at the same time. It's kind of funny. But yeah, we've seen a lot of big, crazy movements, and this market has just actually been, even though we've been lackluster on the indexes and Q and SPY here for the past few weeks, there are still lots of opportunities out there of just crazy things happening. So,
well, let's get Gary's take on the market.
Yes.
Well,
out there?
All I can tell you is if they can't send it lower, it is eventually going higher. Sometimes you can just make a blanket statement like that, and we're in the midst here where the markets had a chance to take things lower into the 1:30 hour yesterday. I'm writing down in my notes, Goldman, if it breaks the 50, BlackRock is breaking the 50-day. Looks like the private equity stocks are starting to roll over. If they get the financials, look out. And by 4 o'clock, they defended them like there was no tomorrow, and they rally them up today. You got JP Morgan is at a new all-time high, and I can promise you there is no chance of the market getting slaughtered or a bear market if JP Morgan's going into new highs. I'm also just going to read a few things to you. This is just from my notes yesterday. NVIDIA at the 50-day moving average, H.E.A.T at the 50-day moving average, Meta at the 50-day moving average, and popped this morning on no news. That is the institutions defending. Amazon at the 50-day yesterday, pops today on news that didn't look so great. That's institutions again. The NDAQ 50-day moving average, Caterpillar 50-day, Synopsys 50-day, DoorDash 50-day, Palantir. I wrote down next move wins. A break below 150. Good night. A move above 162 can continue, though it looks like it's got this little mountaintop there. And then we walk into today, and I'm just making a list of, as I mentioned, JP Morgan, Citigroup looks like it's going to break out. Goldman's back held support. The oil prices are coming down. Yields are coming down. Broke the 4.2. So again, until they break it, they don't. And all I keep hearing is September's going to be bad. And all I can tell you is this market's setting up to go higher because of all this. And that's not to mention also, let's see, I'm looking to my left here. You got A-Lab setting up pretty well. CRDO with good reaction to earnings. Reddit blasted off yesterday, sold it down all the way, right back up today. And just so you know, I'm always looking for what's wrong. All I can tell you all day today, everything I'm coming up with is good. As of this second, knowing, yeah, you got the job thing tomorrow, but I'm a big believer the market tends to factor everything in. And again, if they break out JP Morgan and Goldman Sachs, on top of the home builders look terrific. Every time they pull back to the 21-day, they bounce them pretty darn good. So I wish I could come up with negatives. And this second, I got a few, like Oracle. GEV broke the 50-day, and the last I looked was back up like 15 already today. So it's just I think the market just remains in shape and got defended here by institutions in the last couple of days. And until they crack it, they don't. And hopefully they break things out left and right. I started making my new high list today, and you got GE, new yearly high. Corning, JP Morgan, Travelers in the Dow. That's CRDO, Sienna with the big gap up. ANET looks about ready. And I suspect if things improve, my list of new highs are going to expand like crazy going into October. Again, couple of bad days when you're in range can change the playing field. All I can tell you in real time right now, pretty darn good.
Awesome.
So Gary, let me say one thing, Matt. So Gary, you always say the financials and semis lead. So you've mentioned the financials. Where are you at on the semis?
Well, if you look at the SOX, it did break the 50, but I always say it's okay to break the 50-day after a big run and then sit around, hold support, and then turn up. 5,500 is without a doubt support, and it's holding in there. But it's such a mixed bag in the semis. If you look at the SMH, I believe Broadcom, NVIDIA, and Taiwan semis like 35 or 40% of the SMH. So it's just about what? The equipment makers just got slaughtered because of applied materials. But then I walk in today and I look at KLAC, which got hit hard. That's up 20 and change. So if that rebounds even more, that's more of a help. But I think, look where KLAC is holding. It undercut the low of July. Looks like it's going to get back above. I did see Texas Instruments getting slammed today, so it's definitely a mixed bag. But on the whole, I think it's okay. Off of a big run, and maybe it just needs a lot of time. NVIDIA, without a doubt, is under distribution. But guess where it's sitting? Right in and around the 50-day. Could worsen, could go lower, but in the context of a big move up, I don't think it's that big of a deal. And if it drops to 160, I think it probably finds some support in there. I'm not feeling yet the walls opening up for a big drop just yet.
Wow.
And I will tell you, I've seen so many calling for big drops in the last few weeks.
Yeah.
Crashes I'm seeing. A certain somebody on TV said September is going to be bad. That means it's probably going to be good. I don't
Right.
mention names, by the way.
All
I
right.
learned that a long time ago.
We know who you're talking
And again,
about.
I'm watching these financials
That's
today,
funny, man.
and at 1 o'clock, I thought they were ready to give up, and they just got defended like all heck. And
Wow.
here we go. Here we go again.
I
So-
like you.
Well, you've covered it all. Should we just
Yep.
end the podcast right here? I mean,
Yeah,
we're
Dude.
not-
just sometimes you can just narrow things down into just specific areas here, and leave no doubt the big indices are marking time right now, and that's fine. Nothing wrong with that. The Russell's a little bit better. Just watch the regional banks; they're acting better. And again, I just don't see any disaster here, but I do believe if Palantir breaks 150, I think it's a short. And by the way, it's trading at 375 billion market cap with 3 billion in revenue. So,
Yeah.
if it does drop, I think that would be somewhat normal because I think the valuation's insane.
Agreed.
Right.
But overall, and Oracle's drop. If you look at the IGV, the software's got issues. CrowdStrike, ZS was gapping up and then finished down. I'm not really software, but Microsoft's holding right here near the 50-day also. Again, I'm not seeing any disasters. And let me just tell you, all the emails I'm getting from people that I don't know, what should I short? So,
Right.
I like that you kind of you're kind of after my own mindset of keeping an eye on all the negative stuff. I like to call them the Chicken Little crowd, and I like to pay attention to what they're clucking about because oftentimes I'll find opportunities there. So I absolutely agree with you on that.
Wow.
and it's not 100% out there. I can tell you that, and I've been saying this on radio every day. These IPOs, they opened them up crazy, and they're crashing all of them.
Yeah.
Fig. Now they've been killing CoreWeave and that CRCL. What's the I got the number? Oh, BLSH. What is that? They actually named the stock bullish. The nerve of them. And look what they did to that thing. So
Right.
I've been telling everybody, be careful about hot opens on any IPOs. So that so there are things out there you got to be careful about. But I'm just I'm just watching and looking for opportunity, and all I can tell you is I don't have a lot of breakdowns, and I'm just sitting there watching. This is my list. APP needs work. ANET looks like it's ready to bust. ALAB looks like in the next, looks that's setting up beautifully. CLS, insane up and down. That's the only worry. But look at the strength. CRDO, Reddit, and SE. These things act just terrific. And I'm just looking for them to mark time, break out, jump all over them, and hopefully they got some legs to go.
So
Definitely.
Gary, let's talk about your style, because I think it's unique, and correct me if I'm wrong, but you kind of mix Bill O'Neill and Stan Weinstein.
Yeah, well, I never, I've always, I'm a huge fan of Stan, but I've always been O'Neill. But I just noticed Stan's very good at the bottoms, and I do these webcasts where I show lessons how the home builders went through a bear market, topped out, 50-day flattened out, 50-day descended. All rallies were contained into the descending 50-day. Then at the bottom, price flattens out, stops going down. You can draw a line underneath. The 50-day flattens out, and then all of a sudden starts turning up. And all of a sudden, there's your potential to come out of the bear. And guess what? The home builders and all the related names have done. So that's just another part of the equation. And I got to tell you, bottoming is not easy because there'll be fits and starts and pullbacks. But if you go look at the home builders right now, just clean living from bear market into bull market. All you've had to do is watch the 50-day average turn up, and all pullbacks. By the way, all pullbacks have been to the 21-day, which makes them even stronger. You can see it right there. If you go to like a 1 year, you can see the downdraft, and then it's just been classic stuff. So we include Stan stuff also. And by the way, he's pretty darn good at what he does.
Yeah, no, you may have introduced me to him, and I subscribed to a service for a while. Yeah, I don't have time to trade anymore, so I don't. But yeah, I mean, I think Stan is awesome. So basically, you would then say you're looking more as a trend follower, breakouts, that type of thing.
I'm looking for leading stocks and leading groups until they croak. We like growth more, but we bought gold on this another breakout recently. It was 18 weeks of tight range, and the gold miners started breaking out first, and usually that means gold is going to follow, and boom, before you know it. And we'll see how far gold decides. It's extended here, has to pull back, but we'll see how far it decides to pull back and see if the uptrend stays. And by the way, that really worries me about the future. We'll see what that means down the road. So, whatever's, working, the area is really not working. There's some oil stocks that are working, but most aren't. The managed care stocks suck. That's United Health and the rest of them. Healthcare has been coming around, but nothing really as far as great leadership out there. Waste management is no pun intended, is garbage. And I got to tell you, Bitcoin is acting poorly. MicroStrategy is, I think the scheme may be over of borrowing money and issuing stock to buy more. I mean, look at how weak that is versus the Bitcoin. Coinbase also looks in dire straits. Now everybody loves Ethereum, and that's still acting well. But I think if Bitcoin goes lower, I think Ethereum probably comes down too. So there's we kind of watch everything, which is kind of crazy, but we just like staying on top of things.
So Gary, how high do you believe gold can go? Is that a fair question?
Very fair.
I don't know. No, really, I'm not a target guy. What I tell everybody, let's ride it as far as the market tells us otherwise. And typically, if you have a big run, it's going to end in a climactic move. I'm thinking maybe Palantir at that 190 is climactic, and maybe it's done for now, and it could be if it breaks 150. So I'm always looking for, what's that final moment? And I always go back to Qualcomm in 99, 2000. I go to Tilray when it went crap to the upside, did a climactic move. So I'm always, constantly studying. And right behind me, I got 10,000 charts printed out from different times and different things, bear markets, bull markets, climactic runs. Just so Marty Schwartz, one of the great traders of all time, he wrote the book Pitbull. His famous line was looking at a photo album for familiar faces, and that's all we're really trying to do every day. Is what does this remind us of? And it still doesn't mean it's going to work. That's why we have stops in place. And boy, I've had quite a few stops this year. But that's basically how we work, and we work very hard and ruthlessly at this business on a daily basis.
Got it.
I agree with you on gold too. I was saying that's a very valid question because it is pretty parabolic. It's a good time to make sure you pay yourself once in a while. Just saying.
Well, near term, it's definitely it's up there, but that is 18 weeks of a range.
Yep.
And the old line, the longer the base, the bigger the move does come to mind. And you can go back to the initial breakout 18 months ago. That was basically a multi-year breakout. And that's how you kind of knew that this had a chance to be a monster move, and it turned out to be. If you go to the if you go like to a monthly, you will
Yep.
see it was a multi-year, and away we go.
I plot those out kind of funny. I just draw boxes on them. So I'll draw like a box on the primary move and then split the difference on that long consolidation and just stack an equal box above it. There's my target. So,
Right.
Yeah, you're right. The longer the consolidation or the longer the base, the bigger the outcome move. And that one made 1.5 times the previous move. So, love that.
And we also remember now that you have a president of the United States where you have the 10-year yield at 4.2 that wants to take Fed funds down to 1, which long term is nightmarish, but shorter term can juice the hell out of the market.
Yes, sir.
You see what Powell was able to do with the market by taking rates to 0 and printing to 9 trillion. I have to keep that in mind. I still remember, what was it, Tepper back in 08, out of nowhere came out and said, just buy the living hell out of everything because the Fed is now printing money. So we can't forget that. At the end of the road, we think there's huge trouble off of that, but we have it in our mind that there's no longer going to be an independent Fed. It's going to be Trump running it with people that, hand puppets or whatever. And by the way, this is not politics. We're talking financial here. And it's not a reach to say these things because they're doing it in plain sight. And I think they're just going to have a bunch of lower interest rate people no matter what, even if they should or shouldn't. And that usually is good for markets. And I'm keeping that in my mind. And that's why I'm trying to keep the bent that we're going to go higher over time, because markets love easy money throughout history.
In this case, they're front running the administration, as we should be.
Look, yeah. I mean, look, they telegraph what the plan is.
Absolutely.
Right.
That's where we look at like Matthew talks about Trump's inner circle a lot, and that's kind of a very good way to think about things. Is the market does tend to front run favor. So I mean, if we have someone who is genuinely looking to accelerate the country forward, not to get political, and he speaks about it clearly, in front of everybody, well, what do? You follow the lead.
Believe what they tell you.
That's it.
Yeah, so I wrote about this in the newsletter this morning, where foreign central banks now supposedly have more gold than U.S. Treasuries, and that hasn't happened since 1996, so they say. And it's interesting. We just saw a monthly chart of gold, or GLD. Here's a monthly chart of TLT. It's almost the exact opposite, where it seems to me you've got a flight out of these paper assets that can be printed and manipulated into physical assets and crypto assets that cannot be printed and manipulated. And I've been huge believer that bonds just suck. I mean, there's no reason you want to own a bond, unless interest rates are at 20%, then you want to pack up the truck. I don't know. Any thoughts on any of that?
Well, a couple of things. First off, all I think that's happened with the bond market in the last since the highs is it's normalized. You had the maniac Powell printing to 9 trillion, taking rates down to 0. He took all that money and bought the whole bond market up, taking rates down. So the normalization, that's where we're at. And all I can tell you is if we start breaking lower from here and we start to see the 10-year yielding 5, 5.5, 6, we're probably going to want to be out of the stock market at that point in time. That's going to be the market finally yelling and screaming about 37 trillion of debt, $2 trillion yearly deficits. Just so you know, in the last, I got a report 10 days ago that in the previous 48 days, our debt went up $1 trillion in 48 days. And should be obvious that this administration is no different than the last. That's no different than the last. That's no different than the last. They don't care. And that's going to be something to watch. But right now, for whatever reason, the bond market has been stable all year. You had a couple of visits up and a couple of visits down. I think 3.8 on the 10-year, up to 4.7, 4.8. But we've been sitting around 4.2, 4.3, 4.4. And I think if we stay stable, we'll be okay. But if we start heading up above that 4.6, then the 4.8, look out. But I think amazingly, it's okay so far. I'm surprised. I would have thought we'd be 10% right now.
So, Gary, what are like your 2 or 3 best groups in here?
Well, gold, though
Gold?
near term, definitely overbought. I'll probably, after I'm done here, jump on maybe JP Morgan and Citigroup if it breaks out. And then
Financials?
those names I mentioned to you, those growth names are just setting up perfectly.
Got it.
In uptrends, and now a few weeks of nothingness. We wait till volume dries up and just wait till they jump out again. And if we start seeing 3, then 6, then 9, then 12, that's going to tell us everything about the market. I remember we nailed the top of the last bear market because one by one things were just breaking down, leading to November of 22 or that where everything just started breaking and everything dropped big. We're seeing a little bit of the other side right now, and that is been in an uptrend and now we're resting, and it just feels like so far it's just the pause that refreshes for the next move. So that's part of this, but I have other, as I mentioned, GE looks great. You
GE.
have some names in the building construct. I got some cement names that act well in here. United Rentals acts
Oh
well.
yeah.
So there's these different areas right here, and they're all on one screen. I'm looking to my left. Seagate and Western Digital. I mean, holy crap to these 2 disk drive stocks.
Everybody's
That
forgotten about them. Yeah.
nobody even talks about them, which is the amazing part. I'm looking also now at Boot Barn, BOOT, in the retail that's breaking out right now. Ralph Lauren, RL, Burlington, BURL. You got a bunch of these names in retail, and now American Eagle today with that
Yeah.
Sydney Sweeney crap.
I
Gapped
saw
up.
that.
So there's merchandise. And the good news is right now there's not a lot of new yearly highs because we're pulling back. If we start to see that increase, you got to own. And all I can tell you today, boom, JP Morgan. And if that's not indicative, I don't know what is. If
Right.
JP Morgan's ever on the new year low list, you better be out of the market. That's how we look at it. GE, new yearly high.
Agreed.
Right.
It's
So
a
you're very
different beast.
bullish, obviously. So that's what we're saying, right? Just to be clear, yeah?
Let me put best. I'm not bearish.
Got
Yeah.
And
Okay.
and I will get more if the S&P and the Nasdaq 100 that held support break out again. You just don't argue it. The Dow's already broken out, tested it, and still holding. Though I'm not a big believer in watching the Dow. And think about this: United Health is still down about 2,000 Dow points from the highs. So if that
Right.
was just, we'd be higher on the Dow also. By the way, I mentioned Travelers. Travelers is breaking out today in the Dow. And then Goldman, and you watch Goldman. If it just, look where it held.
Are there
Coming
any
up,
like whys here? I mean, these are a bunch of names, a lot of household names. Why? Why are all these stocks breaking out to new highs like this?
if you notice, I think institutions are very comfortable with these names.
Right.
And I have a screen behind me. I call it the left screen. Nothing politics there, but it's all these bunch of names that were leading, and we're talking a lot of technology and stuff. Uh, they're being left there dead. So it's not very narrow, but it's still narrow out there. If you go put up, ready? put up HUBS, HubSpot.
I haven't traded that in a long time.
Put up NOW.
Ah,
Put up Workday, WDAY. And those are just software. I have maybe 300 names that are not making the grade that used to be at highs. So we don't own them. We avoid them. We don't care about them. And we just, everything that stays in good stead stays on my main screen. Anything that dies goes on this screen here, and it gives us an idea where the money's flowing. And it's in a select group of stuff. And I don't care whether it's only 50 names, as long as those 50 names are doing great, and just avoid. And I said, there's a few hundred. I can, Snapchat is on there. Put up Intuit, INTU, for the sake. Duolingo, DUOL. Again, these things were strong that have gone by the
Right.
wayside. So they go away. They get replaced by other stuff that where the strength is, and we're just big believers in going where the money's flowing until it's not.
Makes a lot of sense. So you also, Gary, you run an investment management firm as well, correct?
Yeah. Yeah.
And it doesn't sound like you're a big believer in traditional asset allocation, large cap, small cap, mid cap,
No.
international bonds, all that
No.
stuff.
I just got an account in that had 200 stocks in it, and I think about 130 of them were in downtrends, with about 60 of them in major downtrends. And I said, did you ask them why they hold these stocks? And they said, well, we're diversified. And I'm like, yeah. And by the way,
Not
one
every
of the
single
one of the stocks in there, put up UPS.
yeah.
That was one of the stocks in
Oh,
the
jeez.
account. And look, I'm not out to put anybody down and stuff like that. I know how Wall Street works, and God bless them. But for the life of me, how somebody who manages money, well, the problem is they're just boilerplate and that they don't care. So we're going to own some of the transports and this, that, and the other thing. And listen, terrific. We'll just not do that. I always say in my webcast, we will never own any bear markets. We will never own any downtrends. We will not tempt anything in downtrends. We will only wait till they either turn or they lead. And that is based on one rule, and that is if you're trading below the 50-day moving average, you have no chance to ascend. Doesn't mean you're going to croak, but you have no chance to ascend. Once you get back above the 50, then there's opportunity. And of course, when you break the 50, it can turn into a nightmare. And there's been quite the few nightmares throughout the years, and we will not tolerate it. That's
So
all.
Gary, you've said, hopefully it's true, that you often warn against holding losses beyond 8%. Is that true? And why that?
Oh, I don't let it go that far.
No?
If we're just so specific, put up GLD. So we did a little initial position at 315, a little bit before the breakout. We just thought it was ready to go. But let's say we bought the breakout just under 318. We would have known we were wrong if it broke below 305. So that would be what, 4%? So that would only be 4%. So we're just so specific on where we're buying. We're going to be doubly specific on where we sell. That's all. And typically the losses we've had are mostly in the 3-4% range at most. And every now and then I'll buy something and sell it Tuesday with 1%, which people get, I get a little flack for, but that's okay.
And so then you sell when the stock loses some relative strength. Is that kind of the idea?
Breaks the reason why I bought, which is usually number one is on a technical basis.
Right. Understand.
And
Okay.
you can see 305 would have been not good. That would have mean a false move and see ya.
Right. Okay.
Yeah, where I'm kind of put, if you can see this, I mean, you've got kind of a breakout right here where it kept kind of bumping up against that level around 315 and then popped above.
Right.
Let's keep knocking on
And
resistance.
now
Eventually it breaks.
if you look, go look at JP Morgan right now. I mean, this is the grand poobah. And if this gets out and stays out, I gather not much trouble. If you put up Citigroup now, that looks poised and ready to move out. If you put up Goldman, look where it held in the last 2 days. Same with Citi, right where it needs to. These things look poised, and I don't believe it's by any accident that we have a Fed that's going to lower rates. And
Oh, even Bank of America.
well, and the strongest one's Bank of New York. Go look at BK.
Yeah.
Yeah.
And even the lowly regional banks have been coming on the KRE. So I mean, again, I am always looking for what's wrong. Trust me on that. I'm always looking for disaster. And if I don't see it, I'm in recognition of it. And as I said, there's stuff that's bad. Salesforce.com, CRM, bear market. We can never own it. Versus if you look at Microsoft, what a difference two stocks make in the software group.
Yep.
And look where Microsoft's starting to hold. Just got too extended on the earnings gap, which faded. And kind of, we'll see. Look, if it breaks 500 cleanly, that's going to tell us something. But there's still plenty of stuff out there that's crappy, and we'll just avoid that stuff.
I'm with you when you look for wrong stuff, and I had a little insight I'm trying to get into. I've noticed that I pay attention to both the used car and the new car market, and used car market just is about to get flooded, as well as the automakers have a lot of inventory to get rid of, and currently the subprime borrowers for new cars and used cars, I mean, they're rejecting people with like 700 on a credit score, and if they have anything less, they're asking for like 20% down on a car loan. At the same time, we have on the outset of the Fed is considering dropping rates. We're looking at projections of a lot of inventory being sold at a not necessarily a loss, but at a deep discount, probably by about January. And if that falls into the credit rates coming down just a little bit, I think there's a good chance for a good rebound there. And I'm looking at GM; it's kind of topped out right now. And I'm wondering if we're going to see a good pullback in that just before the end of the year, and then maybe we start to see the rates get cut, and then some injection of capital back into the market. Maybe some people who are being squeezed out of buying a new car now would have an opportunity by then if they're just patient. What's your take on looking for things that are about to go wrong?
Well, I read probably too much, and a lot of news that comes out, especially when you have Trump as president, is the media will put it a lot of negatives versus positives, and that's just a fact of life, and we know that. So we don't take things with a grain of salt, but we're really big believers. The market knows a lot, and if the auto industry was going into hell, why is GM nearing highs, and even Ford that's had gargantuan losses on their electric vehicles, it's near yearly highs. So we're big believers in the market itself. All we hear about is the home building industry is in a depression, end of the world. Well, why the hell are the home building stocks doing what they're doing?
Yeah.
That's how I look at things.
Right.
I see all the time. Let's see. Harry Dent says we're going to crash and go in depression. The rich dad, poor dad guy, depression, and the market's going to crash. Though we did say he loves gold, but there's no chance of a depression and a crash if the market doesn't say so. So with all the news every day about, and we read it, everything's negative from the news media. Turn on local news. It's the murders and the crime that headline everything. You want to put your head in the sand. So I'm very careful about that. There's some people I follow closely. I forgot the guy's name on Twitter. He's like the genius trucking transport guy that I follow, and he's unbiased, so I watch that. I forgot the guy's name. I just get his stuff pushed to me, so I'm careful about all that. I just think if we're going into recession, I've never seen a market not drop 10-15% before a recession. So
Agreed.
we know that. Maybe there'll be a first time. So if I can, if I had a dime for every negative I'm reading about right now, have a lot of money.
Right.
There's so much negative talk out there, but the market is saying otherwise. And maybe it's the easy money. I don't know. And maybe there comes a day where hell breaks loose. Just right now, I'm looking real time. I'm looking to my left, and boom, Dow's up 200 again, and it's been rough the last few days. The financials, I see Goldman now up 11. That just doesn't happen in a depression, recession, crash, and all that crap.
Right.
And again, I think there are issues out there. I think, look, the biggest issues, debt and deficits, and just based on that, I'm surprised we're not at 7-8%
Right.
10-year. So whatever's moving markets is moving it, and we'll just, my number one line, number two, number three, number four, number five is I'm going to let the market decide everything for me. All the information I get is from the market, or I'd lose my mind.
Trade what you
And
see,
then,
not what you know, right?
Right.
yeah, and as I said, we're going to not buy hot IPOs if they open them too hot, because guess what? The information is they're crumbling them because they're not pricing them right and they're not bringing them out right. That can change one day. We'll take that information. But right now, otherwise, and I just have a list of names, and I have this little arrow that I draw up, and that means if it breaks above a certain range, I'm going to go at it, and if it doesn't, it doesn't. And I think we're in decent stead.
Right.
I
And I
agree.
love bear markets, by the way. So,
Same.
but I don't think we have one right now. You know where the bear market is? Put up any inverse fund.
Yeah.
Right.
Like mine.
Yeah.
So Gary, I'm gonna like drag you into the weeds here for a minute, right?
Yeah.
All right. So you've been critical, I believe, of the U.S. government buying Intel, I believe, okay, or 10% stake. So
Yeah.
Matt talks about crony capitalism a little bit. I think you do a little bit too. Any thoughts on all that?
Well, by itself, I don't think it's the end of the world, but everything together pisses me off. Um, they have all shown that they just really don't care about the taxpayer. They're spending. We're running over I think $2 trillion deficits this year. They're normalizing $2 trillion, not just $1 trillion. That's number one. Buying into companies, number two. But this, they're doing their own book. Crypto this, crypto that, while
Right.
they're investing in crypto.
Right.
And we already know about the insider trading in Congress,
Right.
which is absurd. They keep saying, "Oh, we need rules. Well, we need to get rid of trading for them, right?"
Right.
No, just live under our rules, the American people. If I do what they do, I'm going to jail.
Yep.
And they
Right.
do it, and they do it in plain sight. So all these things put together really piss me off. And I got to tell you, I think Trump economically is an autocrat. And I say that he's using tax policy, which is supposed to be Congress, House, Senate, then the president. He's using tax policy not just for trade. He's upset how they're treating the Brazilian president. So 50% on Brazil. Oh, India's buying oil from somebody he doesn't like, so we're going to tariff them.
Right.
I think that's completely wrong. Apple's being nice to me today. Oh, we're going to exempt Apple.
All right. No, I think this stuff needs to be said, by the way. I don't know if I agree with you 100%, but I think this stuff needs to be said.
It needs to
for
be
sure.
discussed at least.
I
Yeah.
appreciate it. Yeah.
Look, people disagree with me, and that's okay. But look, the president has certain powers, and the problem is it's gotten to be too much. Joe
Right.
Biden forgiving $150 billion of people's loans just ridiculous. The two words executive orders are now so mainstream, and again, debt, deficits, power, and control has got to stop. And it's getting worse by the day. And I don't care whether it's an R in the White House or D. Doesn't matter to me. I don't care if it's the Whig Party. It's got to stop.
Okay, so I'm going to defend you here, Gary, because you take a side here, but you also seemingly take the other political side with like the, the National Guard in DC and Chicago, right? You think they should be there, no?
I think the number one job of any leader is to protect the citizens. Number two job is to protect, and number three, I have no problem with that. Just remember, the people that do have a problem with that are the ones that are overseeing those cities and doing nothing about it. Just so you know, a year ago, DC had to put out flyers on how to protect yourself from carjacking.
Yep.
They put out flyers to the citizens instead of putting the carjackers in jail.
Right.
That's what's going on. So I can't blame for that. I don't want them to overdo it. I don't want them to go into every freaking city. I want them to be careful about it. But I was in DC 3 years ago, and I got chased by 3 kids that were 15 or 16 years old.
Wow.
I got chased. And who knows what they would have done. I turned a corner, and it just so happened there was a cop car there.
Wow.
And they were not to be seen after. And look, that's just one thing. And not just to say that's everybody, everything, but I think fighting crime is huge. What he did with the border, I give him A+++. Think about it.
Yeah, no, that's why. So I hear. So you're a fair guy. I mean, you play both sides.
Yeah, look, stopping what he did in the border saves lives. People were dying, drowning, crossing rivers. They were dying in the back of trucks. And who knows who was coming in? Joe Biden was bringing these people in and flying them in airplanes at 3 a.m. at night into all these cities where the cities had to pay for them and go into debt and take over hotels and kick people out of hotels to put them in. It's insane. So I'm a balls and strike guy. I will tell you great things Trump does. I will tell you things I don't like.
Right.
And I think that's the way most should be. But you know what politics?
Right.
People are in the tank both sides.
Don't be a crony.
So we're not going to mention names, but it rhymes with blamer, right? You've said that blamer is a financial charlatan. Blah 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 blah. So what do you make of all that?
Blamer.
Kramer.
Yeah.
Oh.
We can say that here.
Just so you know, that was in 2008. I never even talk about him anymore. And back then, he was calling the bottom during the bear market, I think 15 times. And then he called it towards the end, and he said he called the bottom. And that to me is just bullshit. Excuse me. But I got to tell you, I don't think I've watched him for 1 minute since that time. So I always say on my radio, I don't comment on anybody anymore. I had somebody email me, Gary, I know you're ripping Kramer on your radio show. It's unbecoming of you. And I just said, I took a step back and said, yeah, we'll leave it be. I did enough. And I don't talk about anybody anymore in my industry.
Okay.
Ever.
I got some of that too, by the way.
That's actually nice, but we'll do it for you.
Some people were telling me I shouldn't.
I read what people say. I think there is a Twitter feed that is the inverse Kramer.
Yeah.
Wait a minute, Matthew, weren't you?
Right. Well, we don't. Hey,
first Kramer.
Hey,
The timing did not work, unfortunately. If I had done it in 2022, we'd have $1 billion in it. But I did it right before NVIDIA announced that big earnings in 2023, and that was that. The one thing I got right was Mag 7.
Yeah, look, I wish everybody success. I hope everybody does well. I hope he does everything. I hope he does well. I just referred back to that 2008 was such BS, and it pissed me off because nobody on that channel ever said anything to him about it, and it was blatant, just about as blatant as can be, unfortunately.
Yeah,
right.
I can honestly say that if it weren't for Kramer, I probably wouldn't be here today. That's kind of how Matt and I got to know each other.
That's how I met Jeremy is through our mutual love of Jim Kramer.
Yes, sir.
That. And he's an Eagles fan too, so I really don't like him.
All right.
Yeah, Eagles beat the Pats once, so yeah, I don't like him.
Yeah.
But I look, I just think, I've learned through the years, through my own mistakes and my years that weren't so great. People can be kicking me in the teeth, so I'm not going to kick anybody else in the teeth.
Good way to be.
Let's wish everybody well, unless they like Hamas and things like that. So
Right. So, Gary, I'm going to say one last final thing here. So we have a podcast, obviously. We had one this week. Jeremy made some comments.
Obviously, he's on
He's
it.
on it. Jeremy was on it last.
Yeah, Gary, did you know we have a podcast?
Jeremy said something earlier in the week that something's about to happen. You know what I mean? So you think what's about to happen is maybe, like a melt up of some sort, obviously, right?
I got to put an if in front of that. If the financials break out, if the S&P breaks out, if the NASDAQ breaks out, and it's all close. What are we down a percent or two from the highs? And now
Right.
you got the Russell and doing its thing. I think, yeah. I won't say, well, let me be careful. I wouldn't bet against the 99 type move in some things because typically bull markets will end climactically. And now that you have a Fed
Wow.
and the president taking over the Fed, and we know what he's going to do. They telegraphed that anything's possible. So as things break out, I think we could be a moment in time going forward, but that is an if. Let's see if it happens. And today, let's see. You got Goldman, well, getting well. As I stated, the setup is there. Now we'll see if it happens, and we're going to be ready. And what I just do, just so you know, this is I use legal pads and crappy paper. I just start listing the new yearly high list because there you go.
There we go.
I print the new yearly high list, and as the list gets bigger, it tells you about the market, and you
Right.
can also see where is it coming from. And if all of a sudden the list is J.P. Morgan, Citigroup, Bank of America, Bank of New York, whatever, we're not going into a bear market, and you got to own the financials. If we start to see those growth names start busting out, I'm jumping on them. Some of them have 200% earnings growth, and until they croak, you got to go with it. So I think a setup's there. If it doesn't happen, it doesn't. But I got to tell you, I was bearish at 1 o'clock on financials yesterday. I
Right.
was worried that they were going to take them down, and they reversed them at 4. And great day today. And now we'll see if they take them out of here.
Right.
I love trading futures exactly that way. I'll trade both directions in same minute sometimes, and it's just a matter of you ride the trend until it ends. Pretty simple.
Well, Gary, we definitely have to have you back, man.
Yeah, I like this guy.
Anytime.
You're one of the few guys that can. I feel a little speechless over here. That's very rare. It's
Wow.
almost impossible to hold me down.
Okay.
All right. Thank you. All right.
Anyway, listen, thanks for having me, Matthew. Keep at what you're doing.
No, you too.
It's fun watching what you do, and hope for great things for all of you, and onward and upward. I don't know if you know, I've had a rough year. My mom passed on Thanksgiving. My father passed just 2 weeks ago.
Condolences.
All right.
Yeah, sorry
91 and 93 though.
I was going to say something about that. I saw your post about your dad. I mean, I only hope my kids talk about me like that, man. It was really touching, actually.
He's I told everybody, and I didn't know how the reaction would be. I said, I'm heartbroken but relieved because both towards the end, and I've received now 2,000 emails from people saying, yeah, it's exactly what happened with my parents, and thank you for posting and telling us about it. So I guess we are all going through life and learning a lot of new things about ourselves, and it's been one heck of a year. That's all I can tell you. And anyway,
Yeah. Well, thank you. Thanks for that.
we'll end on that note. How's that?
All right. You're a good guy, man. See you
Thanks
later.
again,
Thank
and
you.
don't forget to goof on Kramer once in a while. We'll see you guys next
All
week.
right.
All right, later.
Stay well and ask anytime. Be my pleasure.
Please. Thank you very much. Bye.
That's it.